Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacino. How is everyone doing today? So, hello, George. Hello, Davey. Hello, Davey. Again. Yeah, I saw that. CEO Herbert Deese is stepping down. So that, is sort of forced step down by mutual agreement. Snap didn't crash the market. Unless you mean the numbers that came out this morning, unless you mean the flash numbers, they snapped the market. Snap was roll that had a bit to do with Google and Facebook, but that did not crash the market. And this is not a market crash. Yes, the market is potentially putting in a topping pattern. We'll take a look at this. If this is sort of the next leg down, hope it has cankles. Oh boy. Oh boy. Hey, Patrick. Hello, world. Hello, Amadeus Mozart. Oh, wow. Amadeus, we've gained so much fame. Amadeus is back from the dead to join this live stream. Good afternoon, Amit. It's been a while. Busy with office and life. Been catching the recaps in the evening. Well, I'm glad you could join this one live. Good evening, Anissa. Crazy how things in 1 week. Thoughts on Netflix? We can take a look at that. Hello, Sashi. Hello, Mickey78. I just enjoy your intro music so much. Is that why you're watching the channel? Now you can go. I just watched the intro music, and then I go, what is this TA crap, anyways? I just want the intro music. By the way, even if you like the intro music and that's all you stay for, please do consider subscribing and help us get to 5,000 subscribers and like the videos, all right? I'd just like to hit 5K. I would like it to actually be people who want to watch the channel. All right, so that's always a benefit. I just don't want people subscribing for the blank of it. How are we doing? Well, I have to go buy new equipment. I'm still limping along. I'm still researching my best option. I just don't want to make a snap decision, and because the stuff it'll be another Mac setup. I'm just trying to figure out the best one for my video processing, for all the streaming, for everything I'm trying to do, not only for what we're doing now, but moving forward. So I'm in the process of researching, because I'd rather just buy one thing, for the next 2 to 3 years that satisfies all the needs without overspending too much. I mean, I don't mind spending some money, especially with those super chat donations. That's all going to the new rig, but I'm not going to overspend just for the sake of spending money. Got to make, and I'm not going to underspend and then try to do a setup and then go, oh, I'm sorry, everyone. What I just bought doesn't really work for what we need it to do. So, Fed will pump the market next week again. No, the Fed's not going to pump the market. No. Fed's going to do their 75 basis point hike. Who knows how the market will react to that? The market's going to still react, based off what they perceive the guidance is going to be. And now it's fully priced in a full rate cut first quarter. We'll see if that's right or not. By the way, this is what I'm talking about. The S&P, so this new setup is, I have only one camera going. I can't run two off this new setup just because the way it is. But this is what really did it into. We broke out this morning, little pop higher. Then we got the global composite PMI flash. That is a huge drop, nearly a 5-point drop. And the big thing is it's mostly a services economy. And look at that, over a 5-point drop in services. Manufacturing just a slight beat. So that is really flashing that we could, if not already in a recession, get in one very rapidly. So that was, and then you had some of the tech sell-off, which you can see here, S&P 500. I mean, you got a minor pullback in Apple and Microsoft, but Google and Facebook, or Meta, whatever we're calling it now, got hit pretty hard. Tesla's still running out of the gamma juice, but running out of that energy up here. But how much was Meta down? Meta down almost 7.6%. Wow. So that hit it with the ad revenue, which is also, recession based. So we'll have to see, especially with their earnings coming up. Healthcare, again, we talked about that this morning. Somebody had me look at it. Still running up strong. You have some consumer staples and household goods still running up, like Procter Gamble. They have a consumer defensive. I still call it consumer staples. Oil pulling back a bit. That's where we sit right now. Still FOMC, 75 basis point, and back into negative gamma territory. So how did we look? This is going to be a super long recap. We'll do more on Sunday. I am a little tired. So you don't see them going to 100. Who's going to 100? Oh no, I don't see the Fed. I thought you meant some stock or something. I don't see the Fed doing 100 right now, especially with some of the new data coming out. I think they'll go to 75 baked in. 75 is pretty much baked in. And then it's really the question in September if they still are going to like target 50. That's the question. Will this continue down next week? Well, let's take a look at that. Where do we sit? Where do we sit? We sit with cycles at the top and starting to roll over on the S&P with the weekly at the top. So we're into the weekly rotation zone finally. We got the first tap, we got the pullback, now we're into it. So I am prepping for a rollover move next week. First thing is we have to get just using basic analysis. Coming off of, remember yesterday we hit that overbought, now coming off of it. So I am watching for a topping setup. Even if we pull back a little more going into Sunday night, Monday, I'm watching for a bounce off. If we don't just bounce off of these lows today, which we had an outside bar in the NASDAQ, a key reversal in the NASDAQ. This just eked out a new high, then a reversal. But I'm watching for the prior resistance becoming support with the rising rotation zone, a bounce play, and then putting in some kind of topping pattern. That's what I'm watching for because generally we got the first warning shot. Now, could we just head down? Yeah, but this was still in consolidation. When we got these last couple moves, we were still in consolidation. And even this one, the prior breakout area. So this was the breakout area. Came back and retested, then formed it again. Retested that breakout area again, coming support zone, and now moving up. So this is now pretty significant support after this break above it and the key close above it. So I'm going to watch for the secondary reaction through here. Okay, that's my first what I'm watching for, and then the bounce. And then the bounce will tell us a lot. Now, if we just tank through here, especially if we start closing back below about 38.80, then I'm not expecting the bounce. But if we get a move down here and then a closing, in this area or even above it, I will watch for the little bounce, then the next rollover play. You generally don't head straight down through pretty significant support. And this is what I was talking about on the open. Run up, you got the numbers coming out, and boom, tried to hold the levels, and then you got some momentum bars to downside, especially once we broke down this key level. And then we just, and this was just positioning into the close at the end. So we'll review on Sunday what the key levels are, but it's still my next key level is this 39.28, but we'll cover that again on Sunday. Let's just scan through the stuff. Cycles on the 4-hour back to the bottom of the rotation zone on a closing basis, could not close below that rotation zone. What's interesting is this could be forming a very sloppy head and shoulder pattern because of this spike down, but we will keep an eye on that going into next week. Or what's the other thing we could form? Another move up and then a potential double top. If we don't go to new highs. Well, even if you go to new highs, you can get a double top. So that's what I'm keying off of again for next week. Let's see what Rich has to say. The market in 2000 made a big rally in the summer and a new high in September and crashed 50% after that. Maybe we'll see the same thing. It's going to be very telling how this next week's going to be critical. Why is this next week going to be very, very critical? Not just because of the Fed meeting. I mean, let's just peek at what we have coming out just to start a little discussion so you can start thinking about it going into Sunday when we reconvene. But Monday, and not much. Tuesday, just some home price stuff, but you got consumer confidence on Tuesday. You got Fed manufacturing, Richmond manufacturing services index to see if that falls. Dallas services index to see how that comes in. And then on Wednesday, you have durable goods. So that's going to be important, very important. And along with the major earnings next week, then we have the Fed and the Fed press conference. Remember, this would probably be baked in with the 75, but this is going to be what determines stuff, the press conference. And then we got GDP the day after. This is the advanced GDP for second quarter. We got PCE prices, which is a thing that the Fed used to put a lot of weight on. You got jobless claims. So Wednesday, Thursday, and then Friday, you have more with the PCE price index, personal income, employment costs, and you have consumer sentiment final, which is another biggie. So we have, and plus we have all those tech earnings coming. So next week's going to really help shape at least the short-term direction. All right, that's why I'm not going to cover a lot of stuff now. I got to do some more analysis. Tomorrow I'm going to take the rest of this afternoon off after this live stream. I need to decompress. And then we'll come back Sunday and come out with a game plan. Let's see. So that's where that was my little deviation from Rich's comment. Because, all right, let's say we don't break down and the market shrugs everything off tomorrow. We have okay tech earnings, which would shock me because of the strong dollar. But, or they don't guide as bad as thought. Or they delay guidance. And we get some kind of pop-up move. Am I expecting that? No, not with cycles on the daily, at the weekly, at the top. That's a good transition to NASDAQ, which is really starting to roll over. And the NASDAQ, this is outside day key reversal. Outside day key reversal. So higher high than yesterday, lower low. And the close, it would have been stronger if it closed below yesterday's low, but it closed below yesterday's open, which is a warning sign for me. That's why I actually put that in the key reversal. Some people wait for the close below the low. I actually, with the close below yesterday's open and the close below the close the day before that, that's a pretty strong key reversal. But the NASDAQ's still in the same boat. Cycles at the top coming out of overbought condition. Sorry, I hope you don't mind me looking at a second screen instead of directly at the camera all the time because it's harder to do my analysis just off the little restream window. It's easier if I look at the full blown big monitor charts. But again, this is the same thing. We have the prior resistance becoming support, strong rally when that broke. So even on a pullback, this is your real key area back to even 12,150. 12,150, even on a pullback, we have to see the reaction off this strong support because it could get a pullback and then a pretty significant bounce back up. And then a secondary reaction. That's why I love my stronger plays on topping patterns are the secondary reactions. That's what forms a double top is a secondary reaction. That's what forms a head and shoulders, a secondary reaction. Okay, that's why I love those kind of patterns because it lets the secondary reaction unfold and then you get the better reward to risk setup and the higher probability moves. So that's what we'll be watching there. Closing right at that 4-hour rotation zone. So going to keep an eye on that, but closing right there, not closing below it. And this was that next key level, this 12,348, 12,350 level after we broke down. Again, that was the line I outlined this morning. Little spike up. You had that strong spike up actually going into the open. trapping a lot of people and then reversing. That's why I was watching. Remember I said this morning, this is my key level. Why? Because I don't need to get short up here because we could have still bounced around up here. This was the, the breakdown play. Look how nicely it bounced off of that level. Then we got momentum through it. Then it just cascaded down until this afternoon to flatten things out. So again, you don't have to. I see too many people. I still get too many messages where it's like people are trying to short up here when the higher probability short was down here. Sorry, I left a comment on. Hello, Waka. Market been pumping hard recently, so I see Fed tanking the market. Let's see how the week starts out. So 75 basis point. Now, what? All right, if they came out with completely unexpected stuff in the press conference, but they have not been doing that. They've been telegraphing the moves pretty well. So I don't see them tanking the market unless they come out with something completely off the cuff. Like, we're still seeing inflation run super hot. We're considering a 100 basis point move in September, which they're not going to do. Looks like we have a potential weekly double bottom on the NASDAQ. This, I think that extended too far down. I'll do a little more look. But you might. I'll have to take a look at that for Sunday. I have not measured that out yet. And even with a secondary reaction, that's why it is potential and it does trigger, and I'd need a trigger on a weekly basis. Yes, you could run up a lot higher into September. But we'll keep an eye on that. I'm not really going to look at the Dow much now besides same thing, spike higher, no key reversal in the Dow. The major support level on the Dow for a breakdown thing is back at 31,470. So even on a pullback with the rising rotation zone, I'm going to watch for the secondary reaction there. Russell, see, everything's in the same thing. Russell even breaking above the channel. Now we can raise this to the other end and even closing above there. So the area back on the Russell is 1774. We really have to get that secondary reaction, then roll over, but everything cycles at the top. Everything's trading so similarly. DAX didn't do much of anything today, so still in wait-and-see mode on that. Crude did not close below the 62.5. So the double is this little mini double is now a triple. This is off the table. The bigger double that hit the stop or the head and shoulders that hit the stop reduction is still in play. It's hit this zone 3 times, but no close below that. Now remember, if it were to trade below 93.17, that would also take it off the table. Natty gas continue higher. Nat gas after finishing that head and shoulder pattern, still you got that pullback to the 4-hour rotation zone, then the breakout higher. I'm still watching for the topping area, first topping area to come in about 860. Gold, by the way, this is interesting. I have up here for the secondary reaction. This was an aggressive buy, which I didn't put in here yesterday because it's better to wait for the secondary reaction. But we got that push into the daily rotation zone. Now I'm watching for some kind of pullback or basing pattern for a longer term bottom to come in. And I've been talking about an Elliott wave setup. This is a really nice 5-wave decline. 1, 2, 3, 4, 5. With no closing overlap here. That's why I'm also watching back in oversold cycles at the bottom on the weekly. Cycles at the top on the daily, so I'm watching for this bottom to get solidified and then a potentially decent run in gold, but it's got to get above this key prior support becoming resistance. So there'll be a short-term play that could morph into a longer-term play. That's what I'm keeping an eye on in gold. Notes, we actually got a continued push up today to test this potential neckline. So looks like we might be getting that right hand shoulder in. So now I'm watching for a close above the neckline to help fine-tune these targets. Even if we get a pullback move, it can still pull back before closing above, but it would not invalidate that shoulder. Dollar index tried to break down. This was a hard one today. This was a hard one. Here's was the trap pattern. Breakdown, return to prior support becoming resistance, a rollover move, which is what I love for a short trigger, and then you got to keep the stop above here, but then this quick little stop out. So this was actually a breakdown, retest, rollover, and then a stop out. That's why it was a tricky move there. So sometimes things just don't work even with that little rollover move. So dollar index still holding up. We'll cover that. VIX, there was no real fear in this. There was no real fear. So that's also why I'm still watching for a secondary reaction instead of just a continued blistered sell-off. Now, I'm going to be watching this prior key support becoming resistance, see how the VIX runs in here with the declining rotation zone. Euros, still the same thing, little dip below and hold. So now it's still with the dollar index. It's either a breakout or a breakdown pattern. I'm actually watching for a quick rollover play in the euro to help stabilize a bottoming pattern first to see if that's going to hold or if we're going to break to new lows like Bob thinks. Because we got mismatched cycles. We got daily cycles at the top, weekly cycles at the bottom. So we could get another rollover play before the next and put in a bottoming pattern before. Just when cycles don't line up, that's where you got to be a little more patient. Where else do we sit? Let's just glance at the yen. Completed that double top pattern today. So that is all done. And going to see if we now get the potential bigger pullback just as prior. There's pretty substantial support at 135. If that breaks, it'll get interesting. Bitcoin with the little reversal in the NASDAQ, also following that, pulling back into the channel. Again, my key level on Bitcoin is 21,645. What other do we want to look at? What stocks? Tesla starting to watch. The gamma juice was running out finally today. Tried to spike through here. Could not get momentum towards next. I listed this 836 and a reversal off of there. So I'm going to start watching if the market pulls back more for that next pullback. But key support in Tesla. Minor coming in at 795. Major coming in at 775. So the same thing. I'm going to watch then for the secondary reaction there before the next big rollover play. AB, Amazon, still 60 PE ratio. That's why longer term, I think we're going to have a pullback. A lot of these tech stocks are still too hot. And the Amazon component from the consumer with the retail area is going to take a huge hit over the next 6 months. The web services are going to be stronger, but coming up here, nearly a reversal right off the 87.5. I hate when it, oh, sorry. I had that on the wrong level. We got to go to this one. There, it did hit the 87.5. Remember, this was the push down move. You can't use this one. I had that on the wrong level. That's what I was wondering. On my other platform, it said it dinged the 87.5. I had it on the wrong level. Somebody correct me if I do that. If you see and you think I'm doing something wrong, please don't be afraid to put something in the comments and question me on it. But that did hit the 87.5. So that is finished. Could it still push higher? Yes, but that finished, with that, at least you had the 4-hour close above the 62.5, really, with that. But that was a quick, hard to play, but that was quick. Now, on the pullback move, your major support area is back at about 117.25. And let's see, I did not look at the PE, but this is why I'm still, and again, once we get earnings compression, yep, 60.11. AB spot on with that. So that's where, we're going to start seeing earnings compression too, which means the PE goes up if price stays the same, which is what I don't think's been discounted yet by the market. Well, that's Tesla. This was, go look at the gamma stuff from this week in the options market. Remember, when Tesla starts to do, I'm not even going to get into it because it's the way it trades with the options. And it all of a sudden the options volume comes out of nowhere where there's, and I know people said the earnings report was good. The earnings report was not good. No way, shape, or form, and it does still not justify a, the growth stories. I get this stuff. There's still major growth with Tesla. There's minor to iffy growth with Tesla, especially if we're going into a recession, because recessions hit car companies hard. And P/E is still at 98 there. This has a long way to still come down once things unwind. You just got to be patient with Tesla. Inverse head and shoulder in what? Did I miss an inverse head and shoulder somewhere? You got remember, put in the market or the ticker if you're calling out some pattern. Candidate at 100 basis points. I think the U.S. will follow. I think they'll do 75. I really don't. The 100 basis point bet, I don't think it's going to happen. I think they're going to err on 75, and then if they have to do more, if they still have to up it, they'll go stronger in September, but they'll say that in the press conference. All right, the bottom's, see, the bottom's not in. The bottom's, CNBC just said the bottom is in. No, the long-term bottom is not in. Yes, could we get a continued rally? Yes. But again, don't mistake these rallies and bear markets for the bottom. These things it takes a long time for these things to really roll over. A long time to really get the buy the dip mentality out. And if you put this in the bigger perspective, this is still, even on another move up, this is still, even if you correct up to here, 13,213 is still a bear market rally. And that's just a 37.5% harmonic from this whole decline. The 50%, which it could theoretically kiss away even on a continued rally, and I'm not expecting that, but if we trigger a bigger pattern, I'd have to play it, would be to 13,900. And then the potential rollover. So don't get caught, I know a lot of people in here don't get caught with blinders on, but don't also get too bearish until things roll over, because bear market timing is very challenging. All right, that's where I'm cautious. That's why it's tactical. Now, if we make a massive double top pattern, if we get a massive breakdown play, timing gets easier. But until you get some great setups, timing gets tough, because things can have these counter-reactionary moves longer than you think. Snap down 39% short term. Yes, Snap's taking it in the shorts. And remember, my next target on Snap is down at $5.25 to $5.25. If we do rally start next week, I'm just going to watch for a return to the breakdown zone, and not even the full short, and then another rollover play, especially with cycles at the top on the daily. So here you go. See, this was a beautiful side. I talk about sideways corrections to work off over. See, oversold. This was a thing of beauty. Take a look at this chart, because it's not just, I'm not just referring to Snap. This is a great learning lesson. You see how it got oversold? Cycles pinned at the bottom. Now remember, there's two ways to work off the condition. A retracement move. This would have been a retracement move. This is a picture perfect sideways move. See how it just based sideways? Got out of oversold conditions. Cycles got back to the top. And then kaboom. And the rotation zone, remember we talk about going sideways, watching the higher time frame rotation zone catch up? There you go. That's why it's also handy to look, all right, once it got choppy in here, keep, and this was a beautiful shake. So this was a beautiful shake and bake pattern. Hard to play because it was an earnings gap, but shook people in, and then everybody had to bail on earnings, which was a follow-through momentum today, because, if your stop was even at the other side, you had to bail. But that's where keep going through their time frames because this is a picture perfect sideways correction with the from oversold, letting the rotation zone catch up, and then the move lower. Silver looks like the weekly close will be right at or above the 62.5. Do you have a similar take on silver as you do on gold? Silver, I'm watching for, it doesn't have as strong a pattern. It's got a 5-wave decline. 1, 2, 3, 4, 5. It's sitting at this harmonic. I got to pull off this other one. It's sitting at this harmonic. I'm not as bullish yet on silver. And the good thing is it's sitting at this prior major support. Major support becoming, major resistance becoming support. Sorry, I'm tired. It's sitting right at the 62.5. I am not targeting lower prices yet. Just yet. I'm going to watch now for the bounce along with gold, but I am more bullish at this point on gold than silver because it's got a stronger bottoming pattern. But silver is likely to play. The problem with silver is it's broken back below the weekly. So I'm playing it. This would be for a bounce play, and then I got to watch for a stronger term bottom. At this point, my go-to would be gold over silver. And even gold over silver over copper. Now, copper, we could probably get the bounce back pattern also. But gold and, silver and copper are the last two on my list of things to rush into. Wait a little. Sorry, there was a little play here from that prior little top. That's why that was on there, from that little double top. So yes, you will probably get a sympathy bounce, but copper's it's sold off with the recession thing. It's a little oversold now. So I'm going to watch for a move on the next week, on the next daily cycle to come down. I'll watch for a short-term bottom with a potential reconnection with the rotation zone. Silver, potential bottom with a reconnection with the weekly rotation zone and possibly the prior breakdown area with the 200, and then probably another rollover play. Gold's going to be a little more interesting because of the stagflation stuff, and more people are going to target that. Well, there. I don't even need to repeat that. Earnings on. Oh, I will. Earnings on Tesla was super trash for its current valuation and pure insanity. Yeah, it's Tesla though. Don't. Mike, I know there's a bull bear argument on Tesla. But I also don't think the recent report wasn't great. But wondering why the price action, because they said the second half would be better. This price action was all generated from the options gamma. It was all based off options gamma. It wasn't a short squeeze. There's still not a huge short position with people. There was a slightly more, but not huge. People are saying it was a short squeeze. Nope. It was completely a gamma juice play. Once that gamma juice dries up, we'll watch. Again, when you tend to have these gamma juice plays, especially when Tesla releases not so good news or not so good news is going to trickle out. Remember, technically, the Twitter ruling so far with the trial in October is negative for Tesla, but you got that major gamma juice. Why is it negative for Tesla? Because they're focused on, not just the walkaway money, and not bots at all, but the performance. And there could be, even if Elon's not forced to buy it, it could be a major penalty against him, which he'd be forced to liquidate more shares. And yes, they can hold him accountable, even though people don't say they can, because his other corporations are in Delaware, and Delaware can take action against Delaware corporations. Take a look at TBLT, the latest squeeze play. May have some watching who are in it. Yeah, the latest squeeze play. Yep, it just keeps going. This thing's going to be another snap and crap. I should probably put the bigger thing. I mean, this. Boy, I'd hate to see people who are still in this from. Wow, this is just a joke. But what would be the next levels? Well, we got to come to this one. Your next major key area is this breakdown zone with the 25% harmonic, about 1082 to about 1140. That's your next thing. Right now, your support level is about 640. You break back below 640, it's returning back to the fours at this point. It'll keep getting squeezed until it doesn't. Hey, Lauren. Matterport. Oh boy, Matterport. It'll be profitable soon. Where does it sit? Where do Matterport? Well, closing back below the breakout zone, which is never a good bullish sign. Let's see if we do use a significant level. Actually, closing below that significant level too. Why is that a significant level? Again, to help identify for people. Key close on it, pause at that level, emotional move away, key close on it, gap through, key gap open on it, key close on it, and then finally a little move above it, but emotional candle back through, and then the breakout pattern, but this just closed back below it with cycles at the top. So I'd be watching for the bigger pullback in this. When are earnings? 10th of August. So this could easily put in another pullback area before, especially with weekly cycles at the top. If it does reverse, here's your key areas to watch for. If it does reverse higher again, this would not be my go-to play though, because right overhead, I mean, you got the 50 declining and you have the 50% harmonics, so 472. So I'd be watching for a stronger bottoming pattern, if anything, since it's got no PE ratio. So it's profitable. So it might be profitable, but they have no earnings. They might be turning profits, but they have no earnings. Profits are very different from earnings. Earnings are net. So keep that in mind too. Yeah, I'm working on them. There's your update. I'm just trying to get them out. I'm trying to get all this other stuff out. So they'll be out there. But that's why you got to keep tuning in. I keep giving more and more details in the live stream. I mean, on how people can trade stuff. So if you're a diligent person who takes notes, you can learn a lot of it. Oh, we want Netflix. Somebody asked for Netflix at the beginning. Netflix. It's going to be interesting with Netflix now. Little breakout, at least a P to E, but if they start getting earnings collapse, it's going to be interesting on a Netflix pullback to the 200 area. Going to bump that up just a little with the daily rotation zone. So I'd be watching with cycles at the top. And on the weekly and daily, I'd be watching for the pullback play now, especially a break below today's low. I'd be watching for a pullback to about 206 and then reassess there. Overbought after earnings, cycles at the top on the daily and the weekly, into the weekly rotation zone. So we have to reassess back at this key support area. Would not be chasing that higher at all. Hey, thanks, Amit. Thank you very much. That'll help greatly, Amit. Thank you. Amit, give everybody a big shout out to Amit, a wonderful supporter of this channel. Thank you. I'll let you know I'm going to do some more shopping this weekend. I'm not going to let this channel die. I will be here. I will be here for everybody, even if I wasn't planning to buy a new streaming computer. I am going to. because you know what? I really appreciate everybody who tunes in every day. It really means a lot to me. We have a great community, and that's why I said if you see me make a mistake or question something I do, don't be afraid to call it out. Everyone here is I consider my friend. My friend in technical analysis and in the markets. I would never think UPST will come down to a 17 PE ratio. You'd be surprised. I don't know. Let's see where it sits now. Oh, its PE is 17. Why? Why did you not think it would not come down? I mean, now this is where I start watching for. I'd have to analyze the company though, but this is where actually I'd start getting in the area of watching. Remember, I haven't looked at this in a while, but the gap play, and you see you never got the close above the 62.5. So there was no potential gap fill play. It was still the harmonics on there. I'd actually be watching for a longer term bottoming formation in here. This is where I'd start watching. If they still have a decent business, which I'd have to do some more fundamental analysis, you could start watching for a bottoming position down here. Especially if it stops selling off on news. You don't want it to get below 18.12 though. $18 you don't want it to drop back below, but as long as it doesn't drop below $18, I'll be watching for a potential bottoming play. You know? So that could be it. That's a longer term play though. So I'd be keep an eye on this. Remind me, AB. Remind me, AB. If this really pops, this is not one I look at all the time. Maybe I'll set an alert here. I think I'm going to set an alert here. I'm going to set a couple alerts because that's actually interesting. Now that we've got now that we have this in a range of something that's not absurd, I need to do a little more analysis in here, but there could be something I'm going to start watching for. Thank you. Well, there you go. That's going to tank the market. WWE Chief Vince McMahon to retire. Well, that's not a surprise. He'll be back, though. You know, that guy will never end up going away until he'll retire. Then he'll come out of retirement in 6 months. You watch. Back in the days before COVID and reverse stonk split and bad earnings were as death, but looks like anything bad is bullish and everything bullish is super bullish. And that's where we still are. It's why we're not at a bottom. Thoughts on Sam? Open down 30 and then reverse throughout the day to close higher. Yeah, finally. Yeah, I do have some thoughts on Sam. I've been watching for a long-term bottom in this for a while. Still, the problem is still no P to E. That's the thing, but I've been watching for a potential. It's made the round trip move. Here were your COVID lows, and it finally round tripped. So I've been watching for a longer-term bottom in here. And this is a horribly sloppy bottoming pattern. So I really need it to prove itself because the target for me is about back to $400 on a continued rally. And that's not a strong bottoming pattern just yet. This was a pretty strong move after earnings. But the problem with this is there's tons of stopping points and it's still got to get through this 200 at 412. And you have major resistance 393 to 400. So if you're playing this to the long side and still against the weekly rotation zone. So this isn't strong bottom yet for me. But if you get back, this is playable to the upside from my perspective with a closing stop Here's the closing stop level I'd use, about 341. Why there? This is a pretty substantial breakout area. Some people are going to treat it as a double, but I keep a tighter stop on it. And if you say that stop's too far away, you just reduce your position size. Because you can think about it, here's how the way I look at it. You keep about a $17 stop. But if it's going to run, you could have what's that? A $34 price target. So it's a 2-to-1 reward to risk ratio. Now it is aggressive because you're still against the weekly rotation zone. But you did pop, it's coming out of that daily rotation zone. So I'd watch, I would not enter here. I'd watch on a slightly bigger pullback. Again, can't give you the specific trade because I don't know your account or your time frames. But I'd watch to see. And if it does close above here, you get the rotation back up. That's where I'd use this as a key stop level and then play it, which would even get you better reward to risk. If it came back down, though, and tested this level and closed back below it before you got the rotation back up, it'd be off the table, and I'd watch for a retest of the low areas. Hey, Velton, glad you joined us. With Tesla growth, it will be at 50 PE by the end of the year. If stock doesn't move much, something's got to give. Well, we'll see if they actually get those growth figures. Victor, welcome, welcome, welcome. Earnings stink pretty bad. Hold on. Let me see something here. Are we getting that? I got to adjust this. Sorry, let me see if I can expand this. Remember, this is the setup I was trying to. All right, I'm going to roll these down if that's okay with everybody. Does that work better? It covers my head, but who needs to see my silly face? I'll fix that. There we go. Sorry. Earnings stink pretty bad going into next week. COVID surge again in the States as well. Feel like tech will be quite weak. What we thinking for next week? Continue our way down into bear territory. I covered that pretty much in the beginning. If you could watch the replay, the real quick synopsis is the quick 30-second for the latecomers. Gonna watch for prior resistance becoming support in a secondary reaction, and then if we roll over on that secondary reaction, start playing it more aggressively to the short side. You see that reaction here, support, pullback, and then the secondary pop, then a reaction down, or here's your NASDAQ play a little farther away. You generally don't tank after a breakout from a key area on the first reaction down. Market will not go back to normal until things like AMC, GME, and TBLT die off, and any company that has bad burning is not at silly levels. I agree. We still have a long way down to go. But it can take longer than you think to get there. Amit is the GOAT. Again, huge shout out for Amit. You're welcome, Anissa. I hope you can join me on Sunday. Would you hear your thoughts on AMD? Hope I didn't say AMD. Yeah. It closed into the possible reversal zone. Could not get the close above this high for even bigger gap fill. What I'm watching for now, we have the support zone coming in between about 87.41 to, I'm watching this key low from this move coming out of overbought. Cycles at the top. I'm going to see how it reacts. Weekly cycles still not at the top. Into the weekly rotation zone. Now remember, semiconductors overall, SMH. We have long-term sell. We also have a head and shoulders topping pattern, and I'm expecting the semiconductors to easily return to 182 to 180. So that's my long-term perspective. Why do I bring that up? Because we had the short-term double in NVIDIA, which finished. AMD actually, it's another semiconductor. We have weekly cycles still not at the top. Now we can get a daily cycle coming down and then a rotation back up before the next major weekly top. That's why I'm watching. We pulled back to this breakout zone before. I'm still keying off. Let me pull off these other harmonics. The next critical area for me is about 84. You get a daily close below 84. Then I'm watching this. So I'm going to take off this channeling pattern too. Then I'm watching for reversal in 50 to 62, and then that will be the secondary bounce before the bigger rollover play. If you don't get the close below 83, we pull back, but we don't get a daily close below here, which is also the rotation zone. I'm then watching here for the secondary play. If it breaks out above Thursday's highs, then I'm going for the gap fill. If it doesn't break above Thursday's highs, we might have a potential double top pattern there. Or another rollover pattern if it's really weak. So would I be chasing AMD or any semi higher at this point? No, I wouldn't. I'd be watching for this pullback levels to reassess. And then the secondary reaction will be the very telling one. Hey, options 22. QQQ, downside targets. Are you seeing 298, 295? Look at that, right off that. What was the high there? I forgot to look at that. 308.55, 308.60. This is, we had this potential double that never triggered before. I just left that on because I didn't cover it this morning. This is technically a downward sloping neckline on a potential horizontal, but I've been testing this out on downward sloping when it's this close. If you just use a standard neckline, let me pull these levels off too. If you use a standard neckline, it's slightly lower probability, but it's actually more. It's actually decent. That's the play I'm watching. The minor levels, if you're just using standard support resistance, you'd be playing to about 293. 300, below 300, you'd be playing to about 297. And let me just map this out. So you're watching, look at that. Look at that. Fantastic. I just love when technical analysis lines up. So here's my first target, 296.50, 297 area. How do we, so we're using a flat neckline potential. We still don't have a great right-hand shoulder yet, but we have a possibly one forming. But right there, your prior breakout zone, that's your first target to downside. And then the next one would be 294.50, and the next one would be 292.56. But you get down to this target, then it would be the gap fill. And the gap fill 298.41. So those are your targets to the downside. And I might as well just put on your targets to the upside in case you can't join me on Sunday. If you get the bounce and it doesn't get the breakdown play, your first two targets on the upside are about 304.25 and then 305.35. If you get a close above 305.35, at least on a 1 hour to 4 hour basis, then I'd be targeting a retest of the highs. That's your analysis of the Qs. I got to talk, Amit, you got to send me your address so I can get it to Bob. It could go into single digit PEs, but this is where we watch for the potential pattern. Again, we don't have it unfolding yet. Let's see what else. Thank you again, Amit. I think I'm fine. It's just really, because I want to keep this channel free. I like the donation model. I'd rather keep it with a donation model. And, the people who can donate or who want to donate help support the channel instead of charging a subscription fee. because that way we get more people in here. And some people, you know, are newer and can't afford a lot of stuff, or for some reason don't want to support this wonderfully beautiful, fantabulous channel. And if you don't, I'll ask you why. But I appreciate that, and I appreciate everybody else who donates, like Raj yesterday. You have a great weekend too. You're welcome, Paul. How will the sheer numbers of unsolicited retail investors in today's market affect the duration and severity of the bear market, in your opinion? Once we get the next major rollover, you'll get eventually a lot of people throwing in the towel. And that's where we'll get the extended decline. We'll get the extended decline once more and more people who have come to the market in the last 3 years especially, or even the last few years, even beyond that, because of all the Fed juicing, when they throw in the towel on stuff, when you have people throwing the towel on like AMC, GameStop, when you have the people who say, I'm just going to hold forever, which is the absolute insanity, you do not want to hold forever. You want to have a stop level where you're wrong so you can free up your cash. When we start getting those people dumping, then that will be the extended, protracted decline, and then we'll be watching for the bottoming thing. BTC, hey, bet odd profit. Thank you for joining us, BTC. The old Bitcoin, the old coin of bit. Again, is pretty similar to the NASDAQ. Watch for is sitting against the daily rotation zone. Is that let me check something here. I don't think that made it up. I actually did not look at Bitcoin today. Nope, does not qualify. So with that said, we break below about 22,340. I'm going to assess 22,600. You get a close below 22,600. I'm targeting lower prices in the support zone. As long as this holds in here, watching for another push higher. But we also have the NASDAQ. This is trading with roughly 80% correlation with the NASDAQ still. You break down the NASDAQ, it's going lower. Cycles are at the top. While I'm watching for the pullback move now. Weekly cycles aren't. So we could get the secondary. Again, this is where you want cycles matched. Right now is cycles mismatched. Pullback, secondary reaction, and then if we get the bigger rollover play in the close below about this 21,640, watch for the pullback. Overall, long term, I'm still very, very bearish. I'm very bearish. I'm just waiting for the next breakdown play in here. And my next breakdown targets are essentially 11 to 12K. Finally, we got back to the weekly rotation zone. And we're getting the weekly cycles getting to the topping area and out of major oversold condition. Now, if we do break back above, your resistance now is about 23,500. We start breaking with 23,500 and the NASDAQ doesn't roll over. It's the same target I've been talking about. Roughly 24,950 to 25K. Why is no one talking about OTC markets? Why should we be? And XAU, which is do you want Bitcoin against gold? There's your Bitcoin against the dollar. But XAU is gold, unless you guys, there's a specific crypto that I'm unaware of. XAU. If you want Bitcoin, if you want me to do Bitcoin versus gold, it's pretty much the same pattern. Its pricing's just different. So just use your key levels. I mean, if you want to do this, it's the same pattern. Look how similar it is. Your breakdown zone would be 1250. Your minor support's 13. You still have the same key. You can still do the same key analysis. Up here, I do next target will be about 1460. I know all about OTC and the pink sheets. Again, you know how much stuff was pumped on the pink sheets back in the .com boom? You used to have chat rooms and everything. This is before like Reddit. It's the old school Reddit stuff. Before you had line rooms and Reddit stuff, you had the chat rooms, and you had chat rooms which would pump OTC stuff. Literally, there were rooms dedicated to the pink sheets. Okay, and why were you don't want to play pink sheet stocks, but you'd have rooms dedicated to it. Yes, I've been doing this since 1992, so I am old. I do look young. But I went straight to the floors after college, so I'm not that old. I mean, it wasn't like I was doing other things after I got out of engineering school. Went straight to the trading floors. So the pink sheets were the old pumps from before. And people pumped the stuff in the chat rooms, and then you'd see the same kind of pop-up moves. People be chasing it. Nothing's reinvented. Okay? And now you just have it done with these. You had it done with the SPACs, and now you still have it done with the stuff like you guys were listing them. You know, it's why I steer clear of them too. I'd rather play something reliable. I don't like to play pump and dumps. I'd rather play something consistent. The market can go down without Tesla stock. It'll help if Tesla stock, because it's a mega cap. You're welcome, Profit. I hope you'll consider subscribing and joining us on a regular basis. Apple will roll over too at some point. You'll see a bunch of these techs. A lot of the stalwarts will roll over, even Apple. Hey, yes, thanks for saying that, Lauren. Hodel Yodel. Hello. You're very welcome, Bet. Please do if you don't already subscribe. We appreciate it. You're welcome, Optus22. Yeah, Mike the engineer. Electrical engineering. Do I look like an electrical engineer? Thanks. Sterling, I hope you had a wonderful vacation. I hope you had a great week off. I'll be back from vacation on Monday. See, I just saw that. You are welcome. You are welcome. And you want to know, so hold on. Let me end on Friday. I'm going to step out of the camera for 1 second. Hold on. I'm still here. Hold on. See, I showed you the thing from the other day. Look at this. Look at this. Hold on. Where is it? Where is it? Stonks. I got the stonks to the moon. The big flag. Stonks to the moon. That's my commemorative of this time. I'll have to show it. I'll have to put it instead of the green screen one day. I'll pin it up there so you can all see stonks. Stonks to the moon. You gotta. This is how you celebrate every one of these these bubble money printing things popping. You are welcome, Anissa. Hopefully, I'll see you Sunday. Stonks, baby. You know, give it 10 years, people will be like, "What's a stonk? Why are you saying stocks wrong? What's a stonk?" And then you know what? Because hopefully I will still be on a live stream in 10 years and I'll say, remember back in the early 2000s when everybody was trading stonks and Tesla was here and remember people were jumping into GameStop and AMC bought a gold mine which was defunct. And we'll look back at that and newer people will be like, what? And then there'll be another term for us old people instead of like, and I'm not a boomer, but you know like how the millennials call older people boomers? It'll be like, hey, you boomer, what do you mean? We got this now. And it'll be the same old thing. You know, Waka Waka will be here. Yeah, I remember that. I'm still bearish, by the way. S&P to 100. And we'll be all the old people sitting around. Remember the stonks? Remember. Okay, everyone. I hope that wraps it up for a Friday. Just wanted to give a moment of lightheartedness to start the weekend with. Oh yeah, see, we're all here. We're all on the same page. All right. I hope everyone has a wonderful weekend. Got stonks. Yeah, rich to the moon. Everybody, there'll be another expression then, and we'll be the boomers. Oh, diamond hands. I guarantee there'll still be people in there. I owned. Let's see. I owned AMC at $70. It's trading 5 still. It's going back. It's going back. I've been in it for 10 years now. Trust me. We shall see it. 1971 was a great year. I was born in 1970. 1970 was a great year I was born. Just kidding. I was born in 1970. Hey, bad old prophet. All right, I'm going to wrap it up for now. Hope everyone, again, has a wonderful weekend. And with that, I will see anybody who can join me Sunday. Join me for the Sunday afternoon live stream at 3 p.m. Central. If you can't, I fully understand because it is summertime. So if you're spending time with loved ones or families or just having a good old time, do that. And watch the replay. And I'll be on Monday morning unless another streaming rig blows up. But I'm going to go shopping. Might not buy it this weekend, but I'm going to go fine-tune my choices. And again, shout out to Amit who helps contribute to that. With that, talk to everyone in a couple days. Thank you, Waka Waka. Thank you. And come back and leave some comments, especially on this one if you enjoyed it. We sort of had some fun. Leave me a comment or two, and I'll talk to everyone later.